Welcome back, everybody, into another weekly recap. Of course, this week is the one that started the 4th of October up until the 8th, Friday, the 8th of October. Of course, we're going to do our usual pairs, which are gold, Bitcoin, and Euro dollar. So, let's start. We already know that this was the week of the NFP. We started the week knowing that at the end of it, we had the non-farm payroll, we had the unemployment rate, and we had the jobless claims, the ATP private sector, and some minor news or retail sales for the Eurozone, which is not a minor report, but is in a week like this. On Wednesday, we have the ADP. The retail sales on Eurozone, yes, are impacting, but nope, they're not impacting because it's very, very critical, much more critical. The strength or weakness of the dollar rather than the euro is much more important on a global scale. The world reserve currency, which is the dollar. So let's jump into it. So on Monday we didn't have anything much, but let's go on Bitcoin, which doesn't follow much of news reports, etc. So we started the week, as you can see, we were here around on Monday. No, I didn't want this. Wanted this. Sorry, we were around the 47 flat area. If you remember, let's jump into it. I want to show you on the other chart, on the hourly time frame, these PSAs. If they load, just give me a second. Here I am. As you can see, last week we were trading into this order block below the 47 price sensitivity area, which is a huge demand and supply area. When broken, gives you very impulsive action, but it takes a lot to be broken and to then function as a support for the price. As you can see here, after the order block, this week we were trading and ranging above this PSA, multiple taps, and failure to breaks, where these level 48,700, 48,750 ppl, giving us as you can see here, confirmation of entries on for high risk reward buys, of course, buys that were called also above any other of this PSA. Remember that 50k is a huge PPL and PSA as well, as you can see. So going back on the 1 minute, as you can see, we were ranging in another block. We got multiple taps of this huge demand zone, failing to break, giving you high risk reward entries. And the moment that we broke above either the key level, which now this one is off, but let me fix it. 48 either, as you can see, with the taps of the 11, either with the break and retest of the order block highs, or with multiples, with the multiple PPLs that we have charted, giving us the multiple taps and possible entries. We saw a very strong bullish, this was the last tap of the previous high, strong bullish start of the week. As you can see here, let me show you how clean that was, because we saw, yes, strong tap of the PPL, strong tap of this other block highs, strong impulsive move, last tap Now I will show you where it tapped here, and very strong bullish action. As you can see, we had a rally up until 55k, starting from 48.49. Every entry gave us safer entries when price failed to break previous highs. As you can see, exactly here, and gave us like in total 600 pips moves, which happened over 1 day in 8 hours. Of course, most of it was on the 6th of October when we had a very aggressive bullish run. After that, we saw, yes, price is still at this, sitting at these highs, is not nearly trying to break below those previous lows, highs, and make new lows. So for now, we are in a very strong bullish action. If we zoom out on the high time frame chart, you can see that we are revisiting the even the all-time highs areas. Let me just go on the daily. As you can see, we are sitting almost at the all-time highs areas. We are just 900 pips away, 9k to the all-time highs. So we broke above this PSA, broke above this, and we have the next one, which is basically 60k PPL as an important price sensitivity area. So Bitcoin very bullish, as you can see, as I showed you, and closing up the week with sort of ranging between the key levels and the order block highs. As you can see on the date of the 8th, was here. Even with the NFP, it didn't move much. It didn't actually have any impact that I was expecting from such an important report. But let's move on. Let's move on our main pairs, which are, of course, the currency EuroDollar and gold. Gold on the high time frame, we were in a very strong order block. We created a strong order block, expecting exactly the NFP at the end of the week. And as usually happens, we create another block, and then if there is a one-sided sentiment, so very bad NFP, very bad unemployment rate, then we have strong moves above. Or if it's very strong NFP, very strong unemployment rate, we have dollar strength to revisit those previous lows. If, like we had here, we had very bad NFP but very good unemployment rate, we ended up back into the range with a whipsaw on the high time frame from the hourly. Probably we are waiting for the central bank speakers to give the investors some more insight regarding what it means for the central banks, for Powell, for the Fed, what it means to have this sort of report, what it means for them in regarding to the tapering, regarding to everything. So as I showed you, yes, we were in a high time frame on the block all the week up until the NFP. NFP came out really bad, as I can show you. NFP. So let's go step by step. Step by step is way better because yes, we were in an order block, but hey, this is a very large order block. 1770, 1747 means like 230 pips range with many key levels and PSAs in the middle. So still very huge ranges to scalp and to take advantage of even for intraday moves. So at the start of the morning on the Monday we had a very aggressive bullish run, as you can see here, from this huge demand area. This was the one, no, it was not the one I told you, but the one gave us breaker retest above 1764, but multiple failures to break above. After that, on the Tuesday, we had a deeper correction, which ended up giving the dollar strength up until the 1750 huge demand area. As you can see, this can be highlighted as a huge demand area, not just for this week, because if I show you on the high time frame, is from the start of October, and as well, look here how many reaction I showed you many times in my videos. Look here, I will do it in blue, but look at the price, how many times it reacted at this area. It's not a level, it's an area. And that's why it was for me, it was very clear that price would not have broken, could not break this demand zone without actually good report from the NFP and unemployment rate. Coming into Wednesday, sorry, we had the ADP around here, which gave us some whipsaws. Looks like the positive report of the NFP was already priced in, because the ADP came out very good, better than prior, better than expected, better than everything. But still, gold didn't react the way one would expect, dropping below, because yeah, we still have Thursday with the jobless claims, and we still have Friday with the real data. ADP is just the private sector. And as you can see, we ended up ranging again. Of course, if you have seen a few NFPs, you know, especially in this period, where NFP are very sensitive to report for the tapering talks. So they're very crucial, the labor market reports. So I was not expecting a break of this area before the NFP. And NFP came out on Friday. As you can see, you already see the spike up and down. What happened on the NFP was very bad and poor NFP compared to the prior, compared to the expected. It was only 194k new jobs. This was mainly due to government and teaching education jobs that were falling short due to the new rules of the vaccination being mandatory. But what you can see is these green figures. The unemployment rate was much better than prior. We are coming from a 5.2 unemployment rate. We dropped 0.4 to a 4.8 unemployment rate, which is a huge improvement. And as well, the average hourly earnings are much better than 0.2 better than the prior and expected. So going back into the NFP day, let me just clean this and just zoom into the NFP. You can also go on the 1 minute chart. What we saw was that at the data release, if you have seen different NFPs, you notice something already. Yes, these are 10 pips moves, but yes, look at what happened. So 2:30, the data release. The NFP is bad. Unemployment is good. You can already see that the mixed sentiment sentiment mixed, because you have the bad NFP, but you have a very good unemployment. So what do? Bias mixed. So what? We wait for that cycle and see investors behavior. But if you have seen some of the other NFPs, there's already something that is sort of sketchy, because what you see is that if this was the real move on the upside, if for the investors this was a really bad report, so they were buying gold, they were selling the dollar, they thought that the tapering would be delayed, that there would be no optimism in the markets, you would have not seen this move. You would have seen first a liquidity grab on the downside, possibly even to the, so we are around 1762, even possibly at 1751, and then after grabbing the buy orders, spike up to 1781. This candle doesn't even have a single lower wick, not a single liquidity grab, not even to 1759. This is already sketchy. After that, what you see is, yes, a first candle of 100 pips, 100 pips almost exactly, you see. Yeah, open 1761 and the high 1771. So it's basically 100 pips. And it's pretty normal. The next candle, what is this candle? 20 pips. 20 pips. Gold does 20 pips basically here. 16 pips. Does 20 pips any here. This is even bigger. This is after 2 hours. So the size of the candles is already very, very sketchy. Look at this candle. I mean, how much time, how many candles did it take to break above 1772.5? 5 minutes, 6 minutes after the NFP? Nah, this is not what happens. This candle would not be like this. If this was a really bad NFP, you would have seen this candle is nice. You would have seen this candle. Possibly you would have, first you would have seen this candle, or even better, you would have seen this week and this candle, possibly for this week. The next one, like this, lower week to 1764, and then wake up. The very next one, retesting and up. In 3 minutes, possibly 5 minutes, you would have seen price breaking up convincingly the 1772.5 mark. This is not what happened. It happened in a lot of time. It took a lot of time. But look at these candles. Look, do you think this is what you want after NFP? Of course, you can trade it. A lot of people took this is 60 pips as a scalper is perfectly fine. I'm not saying that, but I'm saying that the overall sentiment and bias is not so bullish. And this is what you see. You see the rejection at 1781 during the New York Stock Exchange opening. As you can see, New York Stock Exchange open immediately corrected the move that happened during New York, and on the downside, very strong correction, even further than the prior, even further than the bullish. So we had a bearish action correcting this bullish one. So even deeper than the other one. What you see is that exactly then it bounces from this PSA, it's fine, but this is what ends up being this huge whipsaw on the high time frame. What I'm expecting for next week is that yes, the bias is very, very bearish again, very, very bullish for the gold, for dollar. We might expect that with all this liquidity being rubbed for the sell orders, we will see a much slower, possibly, but break and retest of these lows to revisit at least 1720 and to revisit 17. These are all off, I think. The 1680s and etc. down below. So this was gold. Euro dollar is basically the same. It's following much more the dollar index. So we had a slow morning with a slow Monday with some spike up, reacting at a key level, but then the overall weekly, especially following the ADP, well, prior to the ADP, as you can see, were a pricing in of the optimist coming from the ADP and good job figures that were expected. And as you can see, we were in a very bearish. When the actual news report came out, the pricing in was already done. So we called sales below this PSA and they worked out for 60 pips. But after that, of course, we weren't very much moving. As you can see also on the euro dollar, of course, euro dollar is not gold. We didn't have any spike, really consistent spike up. Yes, we had 20 pips move, which is nothing. I mean, it's a lot for euro dollar. If you compare here, this is only 7. It's not like gold. But as you can see, after much less time, as you can see here, where is it? Here, we already, even before the New York Stock Exchange, dollar had already gained strength and it was already correcting it. So you see, this is much more what I would like to see for whipsawing comments. This is exactly what I was saying. With bullish, okay, retests, but making a lower wick, and then continuing up. You can take advantage of the buys. In 5 minutes, you are retesting the next level. Not that you slowly break and retest and then go up. This is not what is usually happening on gold. I'm talking about gold. On euro dollar, this is perfectly fine. This is already telling you in 15 minutes that, okay, there is indecision between the investors. The sentiment is definitely mixed. Let's just go on euro dollar on the high time frame. As you can see, I'm still expecting we can have either a retest of this PSA. This, of course, was last week. Retest, but then I'm expecting continuation down, especially if we look at the dollar index. Yes, we dipped below, especially with the NFP, but we didn't and we never broke the PSA. Okay, never broke this important PSA, and we can still continue bullish. until we break below the 93,700. We are still very bullish on the high time frame, as you can see. This is the last higher low that brought price to this higher highs. So we can still chart this and then continuation up, especially if we have any particular Fed speaker or Powell itself that are giving optimism to the dollar. So this is it, guys. This was the recap of the week. Very, very interesting things happened. See you guys next time.